Before entering the world of investing, it's essential to grasp some foundational stock trading concepts. And here's a brief overview of the 5 must-know terms of the stock market. Part 1. Equity. In the stock market, equity signifies ownership in a company through shares. When you buy shares, you gain a piece of ownership. Stock exchanges are where these shares are bought and sold. Ask or offer. The asking price represents the lowest amount the seller will accept for a share of stock. Bid. Conversely, a bid is the highest price a potential buyer is willing to pay for a share. Competition amongst buyers determines the final price. Spread. The difference between the bid and ask prices is called the spread. It's driven by supply and demand, with the bid usually lower than the ask. A security with a narrow spread is more liquid than a security with a bigger spread. Exchange. Exchanges are platforms where securities are traded. In India, examples include the National Stock Exchange, that's the NSE, and Bombay Stock Exchange, that's the BSE. Now for you, for seamless navigation in the intricate terrain, you can leverage Strike. Strike provides real-time data and analytics, empowering you to make informed investment choices. Don't hesitate. Register today for a free trial at web.strike.money and unlock these valuable resources.